Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, May 31st, 4:57 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Wrapping up the month of May. May was basically unchanged for all of the indexes, either down a little bit or up a little bit, which is good news considering that we had between 7 and 8 straight down weeks on several of the indexes, which hadn't one of the few times in history that had happened, but we've had a pretty significant bounce over the past 3 days. So let's get into it right now. State of the market, we're in a short-term uptrend, following up on the follow-through day that we had last Thursday. Checking the trend gauge over here, it's a mixed bag. Leaders still neutral, seeing some improvement, but quite a few leaders gave back some of the gains today. In fact, most of my screen was red, not necessarily reflecting terrible days in the indexes, but more reflecting some poor performance in some individual stocks. Short term, still on neutral. Now, I know he said second close on the QQQs above the 21-day would get us over to bullish or an uptrend, but we closed above it, but we closed negative on the day. I want to see a positive day on the Qs before we get our short-term 21-day indicator off of neutral up to bullish. Medium term, still under bearish / downtrend as we are coming into a lot of resistance areas across the 5 major indexes with the downtrending 50-day moving average. We'll take a look at this in all the charts shortly. And long term, still well below the 200-day moving average. So long term, we're in a bearish / downtrend. What happened today? Consolidation / chop day between support and resistance. I know we've got red numbers across the board here, but I consider this more of a neutral day, even though we closed negative. We have come pretty far off the bottom in a short period of time. It's good to have consolidation / chop days like this between support and resistance. So basically, we're looking at 4170-ish, the bottom side of a resistance range where we ran into and stopped today, and 4100 on the downside. We approached that early, bounced right off of it. So a chop day today. G6, our growth index, down 1.7%. S&P down 0.6, Nasdaq 100 down 0.3, Dow down 0.7, mid caps down 1%, Russell down 1.3, 60/40. Global diversified stock and bond down 0.6%. In-house, we're down approximately 0.36%. We'll get to the tail of the tape and the indexes here momentarily, but first let's take a look at the team here at Revere. Trend following is our approach to the market. We take a look at the major indexes, take a look at what kind of trend they're in. When we're uptrending, that's when we are toward the heavy side of how we are invested, looking for the strongest stocks and the strongest sectors. And when we pull back, start to go sideways, we tap the brakes a little bit. When we're in a downtrend, as we have been for pretty much all of 2022, until we had a bit of a rally off of oversold conditions last week, that's when we get the heck out of the way. And if you're interested in this approach, give us a shout. You can email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Let's get to the indexes here, blow these charts up a little bit. So here you can see this was the most recent shakeout low on 520. That was a week ago from last Friday. And then last Monday, a pop-up. We looked like this was a key day, Tuesday the 24th. Looked like we were going to fail, but we closed near the high of the range, and then followed up after the Fed minutes, Wednesday, Thursday, Friday, 3 strong days, got us above the 21-day exponential moving average for the first time since back mid-April. And inside, not quite inside, we did poke our head briefly above yesterday's highs, but let's consider it a consolidation day above the 21, mostly inside Friday's range after the holiday of Memorial Day. So let's take a look at a 15-minute chart here, and you can see us just we gapped down, 0.4%, and it looked like we were just giving it all up, down over 1% here. Bounced though at this 41.05 area, and that was the low for the day. We spent the rest of the day trying to rally, failing, chopping up and down, coming off in the late afternoon, bouncing near the close, then selling off into the close. So really just a choppy, range-bound consolidation day. Excuse me, when I say range-bound, let's go to a 60-day here. You can see this 4,100 level was key back over here at the beginning of May. Back over here, sorry, here's 4,100. Here's where we got up to 4,190 on the 91 on the 17th, then made lower lows. Put in a little handle here on Thursday after the Fed, above it strongly on Friday, and now consolidating here. So above here, this 4,200 area, you can see how we fought to stay above it here at the end of April, popped above it, popped below it, back above it, so kind of playing ping pong there. That's the area, really, this 4060, 4070, all the way up to 4200 area. That's the next area of consolidation or resistance that we need to get through. 4200 is a really big area, and overnight, Sunday into Monday, with the abbreviated day, we didn't trade on the indexes, but we did trade on the futures, and 4202 was the high there before we turned around and had a weaker day overnight Monday into Tuesday. Gap down 0.4%, not a major gap down, but then more selling off. But as I said, found support here right where we wanted to at this 4,100 area. You can see again 4091 back here from April 17th, and 4,100 support and resistance back at the beginning of May. So big area there. We want to hold on to that on the downside. Very key area. Let's go to the Nasdaq 100 on a daily. And you can see here second close above the 21. It's now flattened out and slightly turning up, but a lower. We did make a higher high versus Friday intraday. But when we came back and bounced off the 21 here, this is when we stepped in and added to a long position on the Qs on this bounce off the 21 this morning. And then later we added a 5% SSO size also as we were battling back, and we pulled back and held 4150 at first and bounced, and that was where I added it. We closed below 4150, but that was more of an intermediate term level, not as key as 4100 and 4200. So we have positions in SSO and QQQ now, and I'll talk about another ad momentarily here. So there's the Nasdaq 100. Let's go to the Dow Jones Industrial Average. Coming up on this declining red line, the 50-day moving average, this is where the rubber's going to meet the road for these major indexes, assuming that any pullbacks hold the 21 in the meantime. There's the Dow. Let's go to mid-caps MDY. Even closer to the 21 inside day, nice consolidation day there, and IWM inside day there also above the 21. So 3 closes above the 21 for all the indexes except the Nasdaq 100. 2 closes above there, but the second one was a lower close. We were down on the day. I want to see some more strength come in before we move our long-term signal over to bullish / uptrend. So let's get to the tail of the tape. Let me pop that up here. And state of the market, as I mentioned, short-term uptrend with the follow-through day last Thursday. Headwinds haven't changed. We're still dealing with the strong dollar, inflation, Fed tapering and the balance sheet reduction, rising interest rates, and the Russia-Ukraine situation. Sentiment, put call at 0.96. The VIX was up today, up quite a bit more during the day. Came off later in the day. Fear and greed, we're at a 22, which is just between the extreme fear and fear border. Operating under our bull case currently, where what we're looking for was we needed to initiate a rally and reclaim the 21 day. We did that on 5/26. So what would happen if we flip over to the bear case? That would be a rally failure, a bunch of distribution days, or a break back below the 21 in some key areas, beginning with 4,100, would get us off of the bullish case. So in news, EU decided on a partial Russian oil embargo, and that initially popped oil on the day. Let's take a look at a chart of USO here, and you can see this pop up to the high of the range, the high of the recent range. Let's do an intraday on it. You can see the gap up, and that was the high of the day. This is the second time this has happened. When we had some big news with Russia, Ukraine, we had a huge gap up. And that marked the top for the time being. That was on this day here. And often when these big pops come at the end of a sharp run, that's a signal to take profits. And we have been up 3, 4, 5, 6, 7. That was the 8th straight day on oil toward the top of the range, natural time to pause. So we pulled back there. All of the oil indexes started out up around 2 or 3% and put in shooting stars or topping patterns, meaning you gap up and then you reverse and close inside the prior day's candle. So for now, we might need to see some consolidation on oils. We sold the last of our oils in the middle of last week, and looking for some more low risk entry points, very similar to what you see down in here with a consolidation into the moving averages. So XOP, let's look at XLE, same thing, gap up and a reversal. OIH is oil services. Bearish engulfing closed inside the candle, but oil services were weak from the get-go today relative to the XLE and the XOP, and FCG is the one that we traded last week that also gapped up and reversed. So it may be time for oils to take a break here. Also, some China is supposedly easing some of their COVID lockdowns. Supposedly seen as a positive for the market. We will see. So the S&P, what we were watching coming into today, so this support area 4090 to 4100, resistance area 4160 to 4200, support held, resistance held. So consolidation / chop day, as I mentioned, is about all we've seen. So what was strong today? Not a lot strong. Fertilizers, which had been weak, had a bounce today, and emerging markets. Let's go to this chart because this is normally an allocation in asset allocation models, and EEM, emerging markets, was strong because China was strong because of the COVID lockdown easing. As you can see, I've got an alert set above today's high. For now, all we did is run into the downtrending 50-day moving average and pause there. So that's something to keep an eye on. Started off very strong on oils today, as I said, had a big negative reversal. Bonds down big today, the TLT down 2.2%. So let's bring up the 0 TNX. That means that rates were up, and we've been talking about how the TNX is holding and bouncing right here at this 50-day moving average, where it tested for 4 straight sessions, held, and then the big gap up today got it above the 21-day exponential moving average. So we're keeping an eye on this, and the way we're playing it, we're long this is this TBT. So should hold the 21 on any pullbacks now, but for now this is indicative of interest rates rising. TBT will benefit from that. It moves along with interest rates, and it moves 2 times the opposite of what the TLT does. On the other hand, something that we started out strong but then reversed, GDX gold and silver. Our GLD position, we're down about 1.5% on it, but it did break below the 200-day moving average. So we're keeping an eye on this, going to give it a little bit of room, but not much room at all, as we always like to cut our losses. So what did we do? We bought the Qs. I mentioned that. We bought SSO. We also bought DAL off the 2121 list. DAL and UAL acting pretty strong. This pulled back midday after this 3 straight up days. Got near all this stacked moving averages, the 8, the 21, the 50, and the 200 are all here right around this 40 level, massive support level. And when we started to bounce off there is when we took the position, and I think we're down maybe 10 cents on it right now. We did get this alert too. That's our signal to pyramid. We took a 2% position in this, and then when we get up a quarter of an ATR on this. As long as we're not extended, we want to add to it and take it up to a 4% position, which we got the signal intraday, but we were overbought on the time frame. There's several rules that we're using on a very short-term basis onto when we pyramid and when we don't. So bottom line, chop day between resistance and support. Down in here to the key levels, this 4160 to 4200. What we're looking at to try to get ahead, we're ran into that resistance on Friday, ran into it again today. Today's high 4168, so we got above Friday's high, closed below it right here at 4132, a neutral day today. Let's see what other charts we can take a look at here. As I said, mostly red on the day. Only one member of the 21 over 21 was positive on the day, and that was AT&T, as it continues to be a safety play. The coal stocks, we have two coal stocks in 21-21. They really got hammered, but all they did is bounce off their 21. You hate seeing a down 10% day, but technically there's no damage done to the chart if it bounces at the 21. But these coal charts have extremely wide ATRs, and if you're going to play them, you got to play them with the proper position sizing or you'll get shaken out. So there's AMR, Arch Coal also. Tough day today. This one broke the 21 day and bounced at the 50, and look how choppy this is, just alternating up days and down days with a very wide range. So for now, it below the 21, but holding the 50-day moving average. Let's see what else I wanted to take a look at. Bitcoin had been getting hammered, but had a nice up day. Notice this gap above this recent tight area here where it has been holding. I believe this corresponds to 30K, and got back above the 21-day exponential moving average there. That's Bitcoin. And let's see, that is going to, well, let's look at the fertilizer stocks. They were up today. Their charts have been damaged as they're trying to build the right sides of bases. Now, from a fundamental standpoint, we've got food shortages that are just a reality. You're going to need more ag, these chemicals, these fertilizers to increase the crop yield. So buying these on weakness hasn't worked over the last 3-4 weeks, but when the fundamentals are in your favor, you need the technicals to line up to it, and that's what we're looking for. So if this could get back above the 50-day moving average and start to form a quality right side of the base, this is definitely something that we would be looking at. That was Mosaic. We've also got NTR trying to carve a bottom. You've also got CF. Ran into the 50-day moving average today. This one had been the strongest of the two before pulling back last week. Two other stocks that we're looking at that are very high on our list. Ulta had a gap up on earnings. Wide range day today, but held the bottom of the range, briefly poked above the top of the gap up day. A little bit of a handle here would be very nice. And my preferred semiconductor ON today had an outside day, which means the low is below the prior low, the high is above the prior high, but this 60 level is a key area that it needs to hold. So I would term this as my favorite semiconductor right now. Let's look at AMD briefly, as this one has gotten back above the 21 and the 50-day moving average after a fantastic report on earnings back on 5/4. And then you can't look at AMD without looking at Nvidia, which initially had a big gap down on earnings, but was bought with two fists on this day. And you can see made a higher high in the day 3 after earnings. And the best looking equipment chip stock is KLAC. Got it back above the 200-day moving average late last week, closed right on the 200-day today. Looks like it's trying to put a bottom in, and note the extreme relative strength on these semi-equipment, this semi-equipment company over the last 5 weeks. Relative strength leads to, very often, is an early precursor for some things that are going to lead. I got my alert on that today, and I want to turn it back on. And that's going to wrap it. As always, love to hear from you. Email don@revereasset.com, phone 855-REAL-WEALTH. Wrapping up May, the month of May. Tuesday, 5:31. This is Don Vandenbord with Just the Facts. Thanks for listening and have a great day.